Hey, good morning, everybody. How's everybody doing today? Good morning, Alex. 9 a.m. on this second day of May. Man, can you believe it's May? Crazy, crazy. Good morning, David. Nice to see some writing on those charts. All right, guys, let's do this again. What do you say? Same thing every day, right? Rinse and repeat, build confidence, recognize advantages, post your pictures in class, right? Tell me why you did what you did. Just like David did. David saying good top through resistance on the mid-band, small triggers contracting. Not a momentum trade into that PSO, right? Large trigger, smalls are above the large. So David, the background hasn't changed because the background changes when the small triggers break through the large. Let me show you a picture of it. But that's a great safeguard, right? If you're looking for momentum, the only way to have momentum is if your smalls are above the large for an uptrend, below the large for a downtrend. So when those smaller triggers cross above the large triggers, that's when your background turns green. When they cross below, that's when it turns red. So if you look at your picture here, your small triggers haven't made it below yet. They're kind of riding along. So can't have odds favorable momentum, not yet. And you'll see that in these moments of indecision, these fights right at key areas. So it's not a momentum trade. You have it on the 13-2, but you don't yet have it on the 5-1. Does that make sense? And what you're looking at here are these bounce points. Yeah. 50-50 didn't work. 50-50 didn't work. They're looking. They're fighting. Eventually, one of them's going to win. It's going to break out. The right chart is just a right chart's a 13-2. They're both 13-2s, it says. So David, this is odd. You've got a 13-2 chart here. Or maybe you've got a 13-2 template put on a 5-1 chart, which may have something to do with it. If you right click, yeah, good eye, Alex. So David, right click and go to templates and load in that 5-1 Nexgen Dynamic Renko bar 2023. Or if you want it with the small triggers, Alex, good eye on that one. It was similar, but not quite. And now they're coming down into that key area looking to put a fight up. Good stuff. All right, guys, let's get going. What you just saw was exactly what class is going to be. Yeah, I had someone tell me once, if it doesn't look right, it probably isn't. And I fight it. I'm like, well, that's got to be what it is. So another one of the reasons why I love this classroom. People paying attention, looking. I didn't even catch it that said 13-2, so we had the wrong template on there. You can either shut it down and just build a whole new 5-1 if you want, or try applying that template and see how it works. Alex, thanks again for that. Guys, everything we do in this classroom revolves around creating advantages, right? It doesn't matter what trade you're taking. I took the 50-50 long, had to manage out of it. So yeah, I recognized the 13-2, but then I started doing stuff after, so didn't even look. Everything we do is going to revolve around advantages, revolve around Really just putting yourself in the best position to take a trade. Taking a trade for reasons, not because of emotions. We are going to talk a lot about rules, guys. But before we do, we're going to go to forexfactory.com. I do this every morning because I want to make sure that I'm not jumping in front of a market that may act irrationally or emotionally charged. And today on Tuesday, May 2nd at 10 a.m., we have the JOLTS job openings. So I always scribble a little note at the bottom of a piece of paper, or I grab my phone and say, hey Siri, at 9:55, set an alarm, because I prefer to not trade into news reactions. If you were watching it yesterday at 10 a.m., that manufacturing PMI, that high impact, it did create a pretty sizable spike. And if you were in a long position, you got stopped out and slipped without a doubt. So just knowing where it's at, not worried about what they say, just that there could be the reaction. And then everything that I talk about, guys, comes from the education page. Everything that I talk about can be found right here in the tutorial section. And when you come to the tutorial section, it's really laid out in a foundational kind of style here. Oddly enough, beginning at the beginning. So if you're brand new with me in here, first of all, if you're brand new with me, welcome. It's great to see you. Thank you for being here. This is your classroom. Please, please, please don't be afraid to raise your hand if you have a question. But goes through a little bit about the software, what you're looking at, and then once you have that basic understanding of what everything is, and we'll be reinforcing it throughout the day. Our first hour of class, guys, will be spent looking for what we call a high probability trade. Just discussing the rules, talking about the advantages, and this is your foundational approach, guys. If you are brand new to Nexgen, if you're coming back to Nexgen, maybe you were taking a break, or maybe you've been with us just a little bit and you decided to branch off and do it on your own, but it's not working out the way you wanted to, or maybe you just like hanging out. That's cool too. Our first hour revolves around high probability trend trades. And this is a trade when every indicator on every chart agrees for the trade. Typically when the triggers are the strongest, when there's nothing in the way between your entry, between your targets. And what this high probability trend trade does for you is it teaches you to read your charts. And the reality is that 90% of what you do throughout the day is just going to be chart reading. You're going to be looking at your indicators, you're going to be gauging advantages. And when those advantages are present, that 10% is going to come into play. Good morning, Safia. And that's when you're going to pull the trigger. That's when you're going to enter a trade. But your chart reading is going to put you in a position where you can just look at your charts and understand almost instantly where the market is likely to continue. And then you'll be utilizing that continuation point for an entry for a high probability trend trade. You'll be able to understand where the market is likely to go, and this is going to help you develop a management plan. Making educated decisions on profit targets. And then finally, you're going to understand where the market is likely to stop, guys. And these likely to stop areas are what we call termination conditions. So no matter what sort of trade you decide to take with the software, understanding where a trend may end is going to create an awful lot of advantages. But what it's also going to do is it's going to create an anchor for that highest probability trend trade, because the highest probability trend trade, the trade that typically wins 70 to 80% of the time when executed properly, is a 5-1 trend trade, the same rules that we're about to discuss, that happen after a termination condition on the 13-2, after the market is coming from one of those areas that reverses the trend. And when we talk about the high probability trend trade, it's really only 3 rules. And it's 3 rules that provide 3 advantages. Everything that you do during the day should revolve around rules and advantages. Advantages present, the advantage that you're giving away. And then if you let it boil down to the most simple form, either your rules are met or they're not, and let that be the basis for whether or not you get into a trade, you're going to find that trading becomes a little bit easier, that your reads happen a little bit faster, and that your confidence level is going to soar through the roof. So these 3 rules provide 3 very clear advantages. And I like to say this is the equation for a trade. A trade equals momentum, a clear path, and an entry area. And these three rules happen on two charts. And you're going to see this in the room. I only bring two charts up. There are a plethora of time frames that you can use. But again, if you keep it simple in the beginning, guys, focus on simplicity. Don't overthink it. Don't add things that you don't need to be successful until you've mastered the things that are creating success. Ooh, that was deep. Everything starts on the 13.2. The 13.2 is going to tell you the overall trend of the market. If the background on that 13.2 is green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. If the background on the 13.2 is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short, as this is really the first advantage that you can provide yourself, not fighting that overall trend of the market on the larger chart, because this is the group, guys. These are the large chart mentalities, the large crowd mentalities. And it's this larger chart, this broad stroke of the brush, that's going to give you the general temperature of the market. Whoops, where'd my picture go? There we go. And once you have established your trend, both rules 1 and 2 will be met on the 13.2. Rule number 1 is the strong triggers. That's going to be that advantage of momentum. And we're going to talk about each of these rules and break them down and study them throughout the day, both in the live market and through your pictures. And then rule number 2, those termination conditions, those areas likely to stop the market. We have to be free of those on a larger chart before you ever look for an entry. In this broad stroke of a brush, it's giving you the overall temperature of what the market is doing. And once these rules are met, then you turn your attention to the 5-1 chart. This is a smaller, faster chart. This is essentially refining that broad stroke of a brush provided by the 13.2, and you're going to pinpoint your area of entry, that point where the market is likely to continue. Your third and final rule, good morning, Ziba, that gives you that entry where the market is likely to continue is going to be very precise. You're going to actually use a limit order. You're going to wait for the market to come to you at an area, and you'll be waiting for the market rather than chasing the market. And this allows you to reduce risk and maximize your profit potential. So these three rules, hey, good morning, Marshall. On only two charts. Simple, right? Guys, you can do all sorts of stuff to confuse yourself once you have a foundation, but in the beginning, keep it very focused, keep it very deliberate, and all you're going to focus on for your first 30 days is that high probability trend trade, that trade that typically wins 70 to 80% of the time, that trade that provides advantages, that teaches you to read your charts. And then the goal in your first 20 days is to get feedback on everything that you see, guys. There is a very clear path to becoming a confident trader ASAP. It begins with posting in the classroom, guys. Post your trades, win, lose, or draw. Everything that you do, post a picture in the room. Show me what you've done. Tell me why you've done it. Everything you see, if you have a question. If you open up your chart and you're like, man, I'm wondering about XYZ. Take a picture, right? Use an arrow. Point it out. Use a call out button. Say something clever like, hey, Mark, is this a termination condition? And then just pop it in the room, right? Because what's going to happen is every time you post in the room, you and I have a private session. You and I are talking one-on-one. We're discussing exactly what I see, the question that you've asked, and you're getting feedback. And I do this 15 hours live every week. It doesn't have to be a trade from the day. It can be a market replay trade. It doesn't even have to be a trade. It can simply be a, hey, Mark, is this my best look for momentum? Mark, have we reached a termination condition here? And what it does is it stems the conversation where we go back and look at the rules and review the rules and kind of reaffirm what you're looking for. The second part of class is using the spreadsheet that's provided by Nexgen. And guys, I'm pretty excited. There's a new spreadsheet in development with a new trade tracking sheet thanks to Mary Rocks. I guess John reached out to you, Mary. That's awesome. Amazing that you're willing to share that. But what it is you're just going to track everything that you do. You're going to put your trades in, you're going to take pictures of them, you're going to annotate them, and you're going to be able to recognize advantages in the market. You're going to recognize if you followed your rules, and you're also going to recognize if you've broken your rules. And this is going to help identify patterns in yourself and also patterns in the market. So post your trades in class. Utilize that spreadsheet that Nexgen provides, guys. It's a huge, huge advantage to getting you where you want to be. And then together as a class, we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. You guys are going to simulate daily, and you're going to practice the correct rules, not the wrong trades, because muscle memory, right? You don't want to practice breaking rules. We're going to simplify. We're going to begin simplifying with one trade. It'll ultimately go on to 2 or 3, I'm sure. You have the advantage of going to market replay. You can go back and retrade the day, fixing your mistakes, taking pictures of the correct trades, and repeating this process every day until you're always taking the correct trades. And guys, this is your path to getting where you want to be. It has been proven for the last 25 years. And everything starts with rule number 1, gauging the first advantage. Rule number 1 is a product of your trigger lines, guys. And your trigger lines are going to do a couple things. The first thing they're going to do is they're going to tell you which direction the market is trending. When your small trigger lines, these faster, solid lines, break above the large trigger lines, the slower moving averages, those dashed lines, when those small triggers go from below to above, they cross over, it's going to paint your background green. It's going to give you that visual. We're now in an uptrend, should only be looking for rules to be met for long trades. When they cross below, that's when we get that color change to red, letting you know you're in a downtrend, only looking for rules to be met for high probability trend trade short, giving yourself the advantage of trading with the trend. And then they're going to define the momentum, guys. This is rule number 1 for a high probability trend trade, the advantage of momentum. When your small trigger lines are crossed up, they're above the large triggers, which are also crossed up. Small and large pointed in the same direction. Both are wide. This space created between small and large lets me know that the odds are favorable for the market to continue up. And guys, you're going to hear that in class a lot. Odds favorable momentum is a key phrase that you'll hear in class. You're going to see it on charts typed out as OFM, right? Odds favorable momentum, giving you the advantage of momentum, guys. In a downtrend, small's below the large are wide, they're angled in the direction of the trend. It's the space created between the two that lets you know that the odds are favorable for the market to continue down, guys. This is rule number 1, visually. And if you commit to rule number 1, if you commit to that advantage, it puts you in a great position because that momentum tends to push the market. When your small triggers work their way back inside of large triggers, guys, we call this a weakening of the large triggers. And the weakening of the large triggers means that anything can happen up or down. This is anything can happen momentum, odds favorable momentum. David, I'm sorry to hear that. So guys, rule number 1, odds favorable, small's below the large, larger wide, angled in the direction of the trend. Small's above the large, larger wide, angled in the direction of the trend. Giving you the advantage, that first part of the equation, the advantage of momentum. Is everybody comfortable with that? Especially my new people. I like to make sure that everybody's cool with this best of the best, guys. And you'll notice that odds favorable momentum doesn't start at the very beginning of a move, doesn't go typically till the very end of a move. You're going to look for your advantages from that point when they separate, accelerate away from the large triggers. until they return. And guys, often you're going to see on the 13.2 chart, when we go back and study this look historically, there is a wick or a tail on these 13.2 bars, on this larger chart bars. These large chart wicks are potential entries on that smaller, faster chart. So you're going to train yourself to look for and circle these as you go back and study the best of the best looks. You'll see it in an uptrend, and you'll see it in a downtrend, guys. So rule number one, the advantage of momentum happens on the 13.2. This is the precursor for everything. This is what's going to get you in the right direction for a high probability trend trade. And once it's there, you're going to make sure that you're not trading into a termination condition. Rule number two says that termination conditions are false. Rule number two provides you the advantage of a clear path. And guys, I want to go on to something real quick. And David, this is for you and everybody. Become familiar with your charts, right? If something doesn't look right, it's cool. It can always be fixed. And David, I'm sorry that you had that challenge yesterday. If you make a change on your charts, if you change the templates, if you change the time frame, if you knock it out of whack or anything and you need to fix it, guys, the resources page will give you brand new workspaces every time. And it's a great way to make sure that you're good if you suspect something is wrong. But guys, I'm going to encourage you, if you suspect something is wrong, if your charts don't look right to you, if your 13.2 says that you have odds favorable momentum to the downside, but your 5.1 is waffling, something may not be right. And David, I'm sorry you didn't catch that in time, but we'll see. And David, if I remember right, yesterday your charts looked pretty good in the room. We weren't seeing challenges on your charts yesterday in here. So that was from the end of class yesterday. Looks pretty solid, lined up with everybody's. So I'm not sure when that change may have happened or when that $2,000 got lost. But by the end of class yesterday, you were still pretty rock solid, right? Right on. But that's important, guys, as we're here for you, right? If something doesn't look right, you need a little help, we've got Jason in tech. You can always ask a question in the room. But no, David, yours were lining up with everybody else's, I think. It shows a 13.2. Same thing? And guys, one of the challenges with me is I don't always know what charts you guys run because people run different charts in here. But it's important. No, see, David, that is 5.1 all day long. And that was from 10:20 yesterday morning. So you were 5.1 at 10:20 yesterday. So somewhere, yeah, in that last hour of class, you may have bumped a chart. All right, guys, rule number one, momentum. Rule number two, and I try to keep eyes out too, but the guys in the room are good with that. We all look. Guys, termination conditions. Areas that may stop the market, may create a reversal in the market, may create a reaction that's a large enough bounce. Awesome, no worries. Yeah, don't look in that rear view, man. We got money to make today, David. The areas that may create a stop, the areas that may create a bounce. And guys, these are key areas that reflect a little bit of psychology. And when price reaches them, they may create a reaction. It may be an area for reversal. Your areas are divergence highs. These magenta lines letting you know that when a pivot forms, there is a loss of momentum in the market. Divergence lows, when this cyan line prints from a low It lets you know that as price pushed down, momentum didn't follow. It becomes a key area that may create a reversal. Red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s. Guys, these are all areas that may create a bounce in the market, that may create a reversal. And if nothing else, there's something that create a reaction. And your ability to recognize termination conditions is really a pretty easy two-part process. And it starts with price reaching an area, meaning that in this picture, price trades down to support. When price reaches support, check your trigger lines. If none of your trigger lines have broken through the area, then this is an area likely to stop the market, likely to create a bounce, may create a reversal. But what you're witnessing is that price is reaching a key area that may create a reaction. If the trigger lines don't break through, we call it a termination condition. Rule number 2 hasn't been met. And you can see the bounce that that one creates. Price reaches resistance. Trigger lines can't break through. Resistance tells us no more long trades. Pulls all the way down to support. Trigger lines remain above. No more short trades. Guys, 90% of what you do each and every day is going to be reading your indicators, waiting for an advantage. Can't go long, can't go short. Price pulls right back up to resistance, guys, and you can see that it reaches not only resistance, but a divergence high and a second resistance. 3 termination conditions in the exact same spot. And guys, these termination conditions create a full reversal of the market. Large triggers go from green to red and then provide you odds favorable momentum, ultimately a clear path. Guys, this is what we call a strong top. A termination condition that creates a full reversal is a strong top. This one happens to be called a pivot stop out of a divergence high. Here is your divergence high that happens at resistance, and a pivot stop out means that price exceeds and then trades back to the other side of. When this happens at key Fibonacci areas, guys, it becomes a very powerful indication that that market may be reversing. You'll see it again. Price reaches support. No trigger lines break through, guys. This is a termination condition. No more short trades, even with odds favorable momentum. Is everybody comfortable with the two-part process? Price reaches, no triggers break, guys. Just sit on your hands for a second. It's either going to break or it's not, right? But if it is going to hold, the triggers may roll. And if they roll and provide you odds favorable momentum and a clear path, guys, there's one of those tails. There's one of those absolute best of the best. And here's how you sum up a termination condition. 3 easy pictures. Price reaches resistance. No triggers are through. The area is not broken. There is no clear path. Rule number 2 is not met. Both small and large break above resistance. Resistance begins to act as support. There's one of those tails. This is where you have that clear path, when both small and large make it through the area. Guys, that's it. It's a 2-part process. You know what? I'm going to get rid of that third one real quick, and I'm going to give you guys this picture in the room. I'm going to cut this one out. We're going to take this one out of the equation real quick. And we're going to slide this one over. We're just going to keep it. It's either broken or it's not broken. And guys, for your first 30 days, these are your options. You either have a clear path. Whoops, let's get both of them on there. You either have a clear path or you don't. And if you let it be that simple initially, guys, you're going to spend a lot of time identifying odds favorable momentum. You're going to be recognizing these clear paths. And your ability to do so after that first 30 days of study is going to bring you to what we call a medium probability trade. This feels like a little digression, but we're good, guys. A medium probability trade is defined as when most indicators line up for a trade. However, a small issue exists. The first medium probability trade that most traders take, that most new users take, is a trade that we call a 50-50 trade. And it has nothing to do with your odds of success. But a 50-50 trade means that your small triggers have broken through an area with odds favorable momentum. And I can't say this loud enough from the mountaintops. With odds favorable momentum, that best of the best look. The smalls break through an area and the large don't, guys. 50% of your indicators are above the area. 50% of your indicators are below. This is an area with the potential to break. Strong triggers break things. That momentum can break areas. But it's not broken yet. It's not considered a clear path. This will probably be the first small issue that you recognize in trades when you branch outside of that high probability trend trade. So I'm going to give you this picture with all three. This will be your first edition as you expand beyond the high probability trend trade. But all we're doing is identifying a clear path, right? Sometimes the market doesn't reach an area. It may break through every fib. Both triggers are below. Hey, good morning, Gary. Or you may even have odds favorable momentum with everything pushing up. Guys, this final termination condition is going to be a way to recognize when that market may reverse. And you're going to use this one on a 5-1. And this is the only termination condition that I'm looking for on a 5-1. And it's 3 divergences in the same price range may terminate the trend. 3 losses of momentum in the same price range may terminate the trend. This becomes even more powerful when the small triggers work their way inside of the large. You'll notice that we go from odds favorable to anything can happen. So we're adding weight to those 3 divergences, and it becomes even more powerful still when that third pivot, that final loss of momentum, is higher than the low from a low, or lower than the high from a high. Because now we have a head and shoulders pattern. We have a situation where not only could price not reach the previous pivot, we also have a loss of momentum, and we also have anything can happen triggers. And you'll be able to use this to determine or to recognize situations like this, where the market's kind of turning before an area gets reached. And you're also going to be able to use it to manage out of trades, to be assertive, to recognize change in the middle of a trade, to give you an opportunity to protect profits, to get to a 0 loss level, especially on those medium probability trades. So I'm going to ask one more time. How are we so far, guys? Large chart, strong trigger lines, the advantage of momentum. Large chart, no termination conditions, the advantage of a clear path. When these two come together, we're going to go to that smaller, faster chart. You guys are going to be able to pinpoint where the market is likely to continue. Quiet class today. Market must be busy. Remember that your entry comes from the 5-1 chart, from that smaller, faster chart, that refinement chart. And rule number 3 says that you're going to use a limit order. Hey, good morning, John P. Thank you. We have fun, don't we? We're going to use a limit order to buy or sell a pullback. A pullback is nothing more than a small retracement in price counter to the underlying trend. So if everything is going up on my 13.2, nothing's in my way on my 13.2, I'm going to focus my attention on the 5-1. And this will be the look, guys. I'm going to focus my attention on large trigger lines. Are they strong? Are they wide? Are they overlapping? We use the phrase areas inside of favorable large triggers. Let's define favorable large triggers in pictures, guys. Favorable large triggers mean that both the large and the synthetic, which are both just large triggers, synthetic means it comes from a different time frame. Both the large and the synthetic should be one on top of the other, overlapping, strong in the direction of the trend. Guys, this overlapping and tightness of the trigger lines creates the smallest window of opportunity. And we're going to define our window of opportunity, that area where the market is likely to continue, by recognizing a pullback. And a pullback is a small retracement in price, counter to the underlying trend. And it begins with a reversal bar on the on the 5-1. Everything says up, trigger lines are up. We're going to wait for a little push down, guys. And this goes back to who's in control of the market. The large chart gives us momentum. The large chart gives us a clear path. Everything says up, and the large chart's reflecting the opinions of the market. On this smaller, faster chart, we want a couple yahoos that want to fight trend, that want to fight momentum, that want to jump in from the middle of nowhere, or maybe somebody's taking profits. But it gives Nexgen users that pullback. And when that pullback begins, you're going to build your window of opportunity. You're going to look for areas inside of favorable large triggers. And your areas can be fibs, Fibonacci support, or resistance. It can be yellow 1-to-1s, or it can be a mid-band. If you use your drawing tool and draw a box from the top of the triggers to the bottom of the triggers, you're going to look for that highest point of support to the lowest point of support. And your job as a rules-based following user looking for high probability trend trades is to right-click right at the top of that window and activate your limit order. And either the market's going to come back to that window or it's not. We don't control that, right? The only thing that we're in control of is being sure that we had odds favorable momentum. Being sure that there was absolutely nothing in the way so that we didn't have no clear path. That came out weird. And then finally, activating a limit order for that highest point of support for a long at the area, a tick or two above the area, inside of favorable large triggers, guys. And if the market pulls back to that 79.21 area, you're in a long position with all of those advantages. The equation for a trade has been met. And when the equation for the trade has been met, you're in a trade that typically wins more than it loses. If it's coming from a termination condition, it typically wins 70 to 80% of the time. All of these advantages come together to give you this great entry at that area where the market is likely to continue. Your protective stop will initially go below the window of opportunity, because if the market cruises beyond that window of opportunity, guys, you're no longer in that advantageous position. It's okay. You're going to exit the trade, and anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. It's a cost of doing business. We will graciously allow the market to be wrong. But with all of those advantages in place, momentum, clear path, entry area, this is typically your result, guys. And once you get a reversal bar in the direction of the trade, you can reduce your risk below it. Because you wait for the pullback, the risk is less, and the potential for profit grows exponentially. And guys, this is your highest probability trend trade. This is what it looks like when you put the two together. Remember we talked about these tails on the 13-2. When I have odds favorable momentum, when I haven't reached a key area, if I circle the tail after the fact on my 13-2, ideally it lines up with an area of support inside of favorable large triggers. And guys, this is your highest probability trend trade. Your job as a brand new user is to take this picture, to annotate your chart, write your rules on the chart. Identify what it is that you're looking for and why you did what you did. It's okay to abbreviate a little bit, but what you're doing is you're confirming, you're verifying, you're recognizing that the advantages were present, and this is why you took the trade. This is how you're going to present your chart in class. Every trade you take, you're going to tell me what you did, why you did it. You're going to talk about your rules. If your rules are different than the rules I teach, do me a favor. Let me know. Let me know what your rules are. Couple things I want to point out on the high probability trend trade. These are things that we've come to learn over the years. Is sometimes people go, but Mark, there's no room to the target. Does everybody see how we're about 4 or 5 ticks off of that key area? And a lot of you in the beginning are going to say, well, I just don't have room to the target. I'm almost to a termination condition. I'm not taking that trade. Remember that we are taking pullbacks, right? We're letting that small crowd push us back to the key area, which means that our distance to these trouble spots grows exponentially. Rather than having 4 or 5 ticks, you now have 20, 25 ticks, which is more than enough room to capture. The other thing that newer users are going to wonder about is, but Mark, the small triggers turned against me on the 5-1 at the time of entry. 99 out of 100 times, guys, those small triggers are going to turn against you on the 5-1, because remember that the smaller, faster chart is just that. It's a refinement tool. And in order for price to push back to your best of the best area, there's going to be a little change in momentum. There has to be. If you don't get that momentum change, it's not going to push deep enough to get you to that great entry. So ideally, you're going to go back. You're going to spend 30 days looking for entries, right? You're going to spend 30 days identifying advantages, giving yourself the best of the best, and you're going to be able to do that on a 13-2. And let's see if we scroll back, tighten that up a little bit. The S&P has not given an awful lot of entries, has it? So let's go to crude oil. And let's go through how to study real quick, guys. Whoops. I may not have crude oil open yet. Oh, I do. All right, guys, so we're going to look for odds favorable momentum. Man, what a downtrend. Here we go. Odds favorable momentum. Small's below the large are wide. They're angled in the direction of the trend. Guys, give me a Y in the room if you're comfortable. This is your best look. That's your strongest momentum, and this is your clearest path. This is your highest probability look on a 13-2. And if we scroll back on our 5-1, where is that circle? Straight back to an area of resistance inside of favorable large triggers. Guys, will you wake up for a second and give me a Y in the room if you see it? Because your job is to do this, is to scroll back, to build trust, to recognize. 2 ways to annotate a chart, guys. If you have Snagit, and I'll tell you what, I'm a big fan of Snagit. And I have a picture of it. Let me find it. You can take a checklist and you can pop it right on your chart, and you can verify that your rules were met, guys. Is the market coming from a good top or bottom? Is it coming from a termination condition that creates a full reversal? It's not mandatory, but it increases the likelihood of success. Did we have odds favorable momentum? Absolutely. No termination conditions? 100%. Area for entry inside of favorable large triggers? Guys, 100%. Rules-based, beautiful entry, low risk, easy profits. Guys, this is the trade that typically wins 70 to 80% of the time. This is the trade that if you focus on it for 20 days, right? 20 trading days, you're going to be able to find the highest probability trend trade. It's going to develop patience because you see that these don't happen all the time. You're going to develop recognition. But the most important thing that you can do, guys, is save it to screencast. Whether it's Capture or whether it's Snagit, you're going to save it to screencast. And you're going to come right over here. And you're going to post it in the room, and you're going to get feedback on everything you do, guys. 15 hours a week, live, getting feedback. And when I pull this picture up, We're just going to have a conversation. Whoa, that's a big picture, isn't it? We're going to talk about your momentum. We're going to talk about no termination conditions. We're going to talk about your entry. And we're going to give you the opportunity to make sure that you are, in fact, taking the best of the best, following the rules, meeting the advantages. And then the next thing to do is to go to your spreadsheet. And here's the new one that you guys are going to get soon. Check this out. You're going to put today's data in. You're going to say it's 5-2. What type of trade is it? Guys, you're going to have drop downs. It's a trend trade. I'm going to put a link to my picture in that. How did I feel? I was confident as all get out because I knew that my rules were met. It's still a trend trade. Strong top or bottom, you know what? It was weak. What did my 13-2 triggers say? They were strong. What did my 5-1 triggers say? They were strong. No divergences. I don't have an 8 range. I hit my first target. I hit my second target. I won everywhere. What are my notes? Perfect high probability trend trade. And the cool thing is I'm going to come back and study this every day, guys. I'm going to come back tomorrow and I'm going to see what I did and how I felt. Did I follow my rules? And I'm going to look at this picture. Yep, Gary working on it. This was compliments of Mary Rocks. She helped us out with that. And I'm still going to take that favorite look, guys, and I'm going to come to my second page. And I'm going to insert that link. And I'm going to create a hyperlink, and I'm going to call it perfect high probability trade short. And I'm creating a database that I can go back and study these looks over and over and over again so I can develop confidence in the look, so I can develop trust in the look. And guys, this is your first 30 days. Your first 30 days is focused on nothing more than entries. You're going to write a plan. I'm going to give you a plan. I'm putting this one in the room right now, guys. What you testing, Gio? You got pictures. They're a little crazy, but you've got pictures. Guys, I just put an example plan in the room. And this is just a simple plan, a basic plan, a mechanical plan for brand new users to keep it simple. And you're going to use the phrase my trade is. My trade is the high probability trend trade. All I'm doing is defining my entry point. To enter this trade, I must have the conditions of the checklist met. And guys, that's the next thing I'm going to give you. I'm going to give you this checklist. Print it out. Put it on your desktop. Have it on one of your spare monitors so that you can stare at it and verify it every time you take a trade. So in order to enter the trade, my plan says that my rules must be met. I'm a rules-based trader because my rules provide a statistical advantage of a trade that typically wins more than it loses. You're going to start taking pictures, guys. The goal for you each and every day is 15 pictures a day because 15 pictures a day is 75 pictures a week. It's 300 pictures a month. And by the end of your 3 months with Nexgen, you should have close to 1,000 pictures. And I'll tell you that the people that take the most pictures and then go back to study them are the people that are recognizing patterns the fastest, that are creating a database not only in their brain but also in their spreadsheet that gives them clarity. And then once you define that entry, remember it's just the entry. That's all you're looking for. Now you're going to define your management plan. So just like a very mechanical approach to an entry, rules are either met or they're not met. 100% pragmatic. These are the looks. These are the advantages. This is what gets me in. You're going to do the same thing with your management. You're going to keep it pragmatic. You're going to keep it opinionless, emotionless. And this tends to be the most straightforward approach for new users. Trade 2 contracts, initial stop will be 12 ticks. adjusted below or above the window of opportunity initially, right? Where the market shouldn't go. Once the market moves in the direction of your trend, move it 2 ticks above or below the reversal bar in that direction. You can take profits at $100 on your first contract, move your stop to break even. You have money in the bank and nothing to lose, and your second contract is $200, guys. In the beginning, from perfect entries, all you're looking for is $300 profit. And if we look at that example from today, guys, that was an easy $300 profit. If you were in at 22, you were out down here at 02 before the market ever even slowed down. $300 in the bank, dopamine kick, confidence through the memory of success. And guys, if you allow this to be your path for the first 20 trading days, for that first 30 days with Nexgen, you're going to understand how to read your charts, and you'll understand fluently where the market is likely to continue, where it's likely to stop, and where it's likely to go. And the idea, my hope for you, is that you'll keep it simple and build a foundation with the high probability trend trade that is capable of winning consistently. And then from that very basic foundation, you're going to expand your knowledge through repetition. And I can tell you that there's 2 things that come from a high probability trend trade that you're going to learn. You're going to learn patience, right? You're going to learn a lot of patience as you wait for that trade to set up in the live market. But you're going to understand whether or not you have the ability to do nothing when your indicators say there's nothing to do. Guys, I have smalls kind of outside, not my best, right? Maybe a small issue. Can I put an order just below a mid-band inside of favorable large triggers? But because I don't have the strongest trigger look, we could say that one issue exists, right? And what is that one issue? Well, that one issue is not having the best momentum. Here's odds favorable momentum. Price hadn't reached that Fibonacci support yet. Does everybody see it? If I circle the tail, where did it come back to? Let's see. It does hit resistance inside of favorable large triggers. And this is a pattern that you'll recognize a lot, guys. When you have odds favorable, when you haven't reached a key area, sometimes divergences may push you a little bit higher. You've got one trigger line inside of triggers, nothing inside of these, but guys, look at the split on the trigger lines. Do you see how it creates a larger field? From the top to the bottom is this big. But there's only one area inside of favorable large triggers, guys. Only one area where that market is likely to continue. But because of divergences, we jokingly named this one the Pineski. Guys, when I have strong triggers, this is going to be your first pattern of just chart reading that's going to help you create an advantage on picking entries. When the rules are met without question on the 13-2, let's make that white, right? Odds favorable, haven't reached the area, and you have very strong triggers on your 5-1. Does everyone remember the term pivot stop out? Where price exceeds a divergence low and then trades back above? Pivot stop outs on the 5-1 with strong triggers on both charts typically create a pivot stop out. So if I see 2 divergences on my 5-1, my expectation is that that second divergence is going to take out a previous divergence high. Which if I get in at the midband inside of favorable large triggers, it gives me a clear indication of where my stop probably needs to be. to remain safe, that area where the market shouldn't go. Guys, this is nothing more than chart reading. This isn't an entry. The entry is still at the area inside of favorable large triggers, but this creates an opportunity for you to recognize where the market may go. It gives you an opportunity to place your stops in the proper spot. This is a pattern that helps you make good decisions on stops. Guys, you don't need to know the pattern for entries, but this is something that happens often enough that it gives you an opportunity to stay a little bit on the right side of things, to keep your stop maybe where the market shouldn't go because you can identify that divergence high. News in 4 minutes. Thanks, John. Guys, because remember that we're going to take a basic pattern, basic advantages, and then we're going to grow a plan from those advantages, right? So this is just chart reading. I put it in the room for you. Go to your chart reading section in your spreadsheet. Get that link in there and call it, what should we call it? 5-1 PSO. Perfect. And now I can go back and I can study this and I can recognize these looks to help create advantages as I grow from that very basic foundation. So guys, since we have our first news coming up, we're at the end of the first hour. I'm going to go take a quick break. I'm going to stretch my legs, get some water. When I come back, hopefully I'm going to see pictures from you guys. I'm going to scroll up. I'm going to look at anything that you guys have posted. But honestly, I don't think there's been any today. So a lot of one-way movement, not a lot of opportunity. So guys, when you're sitting on your hands and you're waiting for a trade, take pictures. Identify things, right? Here you can say 3 divergences in the same price range, and then go all caps, may. Get your fingers drunk. May reverse the market. Not a sure thing, but it takes away an advantage. Right? Take that picture. What a great study tool. Upload it, and let's go back to just chart reading, right? Chart reading things. Or we'll put it under termination. And we'll call it 3 divergence. And now I've got it. I can go back and I can study it. Guys, I'm going to take a few minutes. I'm going to stretch my legs. We've got news in 2. I'm going to leave the S&P up. Let's see if it creates a reaction. And I will be back in about 5 minutes. I'm going to go reload my water real quick. Back in a few, guys. All right, guys, I'm back. Miss Mary, I'm here now. Well, it looks like news pushed it down, didn't it? We have a little bit of a sell-off going here in the S&P. But that's okay. What are we doing? We're looking for rules. That's it. Rules met, rules not met. What do we see right now? We've got anything can happen triggers, but we do have a clear path, right? We do have strong triggers, and we have an area inside of favorable large triggers to the downside. Guys, this is one of those situations where you begin to break outside of that high probability trend trade, and you're going to start to weigh things out. Well, if one small issue exists, I don't have odds favorable momentum. You may develop a plan that says, I'm willing to take a shot in an area likely to stop the market. And this is all going to come through repetition and practice and going through and taking a look and using even those basic foundational approaches that we took as new users. If price reaches 4163.99 and all of these trigger lines stay below, isn't that an area likely to stop the market? When areas break, pull back, support acts as resistance. You see it happen quite a few times throughout the day. As the area breaks, support begins to act as resistance. These are patterns that you'll begin to recognize that you'll be able to incorporate into what you're doing. So guys, we're going to take a look at some of the pictures that you posted. Luciano got us going today. When do I consider 3 divergence done with? So Luciano, great question. I use divergences in the exact same way that I use areas. When my trigger lines get to the other side, I consider it broken, and it kind of starts that clean slate. What you have here is very much weak triggers, 3 divergences. And this is a market, this picture's taken in a market that's trending down pretty dramatically and right before news. And it actually kind of shows them stuttering a little bit during news. But once my trigger lines get below it, I consider these areas done and over, and we'll kind of start the process over of counting divergences. Does that make sense? So I use that same theory that I use for areas. All right, Tony the Tiger. Termination, 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 termination. Absolutely, right? Everything says we've reached an area likely to stop the market. You're even getting divergences here. I love these pictures, guys. These are the my rules aren't met pictures. This is the market says not yet, so I'm sitting on my hands doing nothing. Jose trading crude. So termination condition creates a full reversal. Full reversal creates odds favorable. It's one of those 50-50s. Smalls below, large above. Because of the termination condition, it adds fuel to the fire. No divergence, picture perfect pullback right to support in the mid-band. It's a little bit above those trigger lines, but this is a great momentum style. And then out with divergence. Jose, beautiful trade. Beautiful trade. Paul, let's see what you got. Mid-band works pretty well in a strong trending market. Certainly does. The old adage, guys, if this market is just railing down, some traders will just keep selling a 5-1 mid-band until it stops working. And that one seems to be working just fine. Nice job, Paul. Then Tony says, one more try with strong triggers on the 13-2. out with divergence. So Tony, just making sure that I'm looking at this right, you are trading directly into a termination condition, right, at 2005.1. So you had a termination condition on the 13.2, yeah, and you had two divergences. And had to get out with that divergence. You know what? You made a little money on it, though. Nice job. Using that much momentum, it's likely to retest a little bit. You guys, remember that your rules aren't my rules. Your rules are your rules. And Tony says, because of the momentum, because of everything saying up, because of the areas, he's willing to take a shot. Tony, one thing that we can talk about on patterns here, and maybe this will help. I have this conversation with people a lot, is when you start getting multiple divergences on the 5-1, watch that bottom of the window, right? Because when we're talking about taking those entries at the very top of the window, it's because of the momentum, it's because of the clear path. So just being aware, and I think you did a great job with your stop, keeping it out of there. But a lot of times, a couple divergences will push you just a little bit deeper into that window, yeah. Then Jose, momentum trade. Everything says down, the area clears. You take the stab back to the fib. Beautiful trade, Jose. You are on today. Jose's like, I'm taking all the money. And then the same thing going the other direction. Jose. It looks like you found your niche. That was yesterday afternoon. Everything says up, right? Everything has momentum. Everything is strong. Break the area, stab back, giddy up. I love it. Beautiful trading. And guys, you can see how Jose took these basic elements that we teach, odds favorable momentum, clear path, and is developing them into a trade that suits his needs, that fits his personality, that goes with his risk tolerances, right? And I think what I like is that this trade looks exactly like this trade. So it's consistency, right? The rules are able, you can back test them, you can look at them. It's a great trade, Jose. Down 1,000, went up 800. That's a nice turnaround. Feels good when you pull that off, doesn't it? Paul, you're still taking the mid bands, huh? Just all the way down. Nice job. Well, not if there's a termination, but yeah. Strong trending market. Nice. Hey, Gio, can we do a little tutorial for you? I'll give you a little bit of help on this one because I really do believe that pictures are the most important thing that you can do with this classroom. Putting them in. Are you with me, Gio? Awesome. Are you using Capture or using TechSmith? TechSmith Capture or Snagit? Okay. I'm pulling mine up right now. I'm going to show you a little trick that'll get you super clear pictures. So when you've got your charts up, right? And you click the big red button, if I hover over just one of my charts, it's only going to take a picture of one of my charts. Click on it, capture. Whoops, it's going on my other screen. So now all I have is my 5-1. So ideally, I'm going to click that capture button and go from the top left on your 13.2 to the bottom right on your 5-1. And what it's going to do is it's going to give you both charts. And then you can bring it up, and then you can kind of line up what's happening on both, and you can see exactly what it is you're doing on both charts. That'll help a little bit. And then, of course, using that call out button. Just one of those things not everyone knows in the beginning. When you click on capture, check it out, guys. Is it just me, or did this termination condition push the market down violently right to Fibonacci support, and there's a bounce? Pretty cool. Fibs amaze me every day. Every day it amazes me where the market stops, where it reacts, where it creates a bounce. So now it's just a matter of waiting for rules, right? Waiting for rules met, rules not met. Guys, when we talk about strong tops, when we talk about strong bottoms, if all of your trigger lines make it through a Fibonacci area, don't consider this to be a strong bottom. When we're talking about strong tops and bottoms, we're talking about price reaching areas and absolutely none of the trigger lines breaking through. Guys, this is your best look. Pivot stop outs right at 1-to-1s, that's your best look, and that's what typically creates it. When it's not coming from that key area, very often it puts the market in a position for continuation. And that's kind of what we're seeing right now here. Is we're a little bit, everything kind of went through. Notice that your large triggers have remained on the other side of support. And we'll see what happens with it. Recognizing patterns. Excuse me, 1 second. Sorry about that. Had a little bit of a sneeze. So guys, as the market is railing in one direction, it leaves us an awful lot of time for discussion. It gives you great opportunities to ask anything that you want to ask. What do you want to talk about today? You want to talk about entries? You want to talk about, some of you are starting to incorporate an 8-range chart. How do I do that? We can talk about that. Good bottoms and good tops, Safia? Absolutely. No, it's okay. We'll go to the termination condition section. When I talk about a good bottom or a good top, I'm talking about a Fibonacci-based area that none of my trigger lines have broken through. And I think that that's key. And there will be times where there's overrun, but as a basic, giving you the absolute best look. Absolutely no trigger lines go through a low. Absolutely no trigger lines go through a high. This is what we're calling a good top, a strong top. And in order for it to be considered that good top or strong top, it has to create the full reversal. So you can see here you get the pivot, but it's not from Fibonacci. And the market goes up and ultimately continues down to that next key spot. Guys, I'm telling you, these deep pockets, guys, they know these areas. They are hunting and seeking. So when they reach them and none of the trigger lines go through, it adds some weight. If they exceed them, kind of turn from nowhere, it can still be a pivot. Yep. Nope, a good top will be below resistance. So think of the top of your screen. We've reached resistance, the top of the move, and it creates that full reversal, odds favorable. That's a good top. And then as price moves all the way down to the bottom, right, to that support at the bottom, none of the trigger lines go through. There's your good bottom because it creates a full reversal. And one of the parts of that is here it's just a termination condition. This isn't a good bottom yet. This is just a termination condition that keeps you from going short. When it creates a full reversal, then it becomes the good bottom. Termination turns into a good bottom or a good top. Does that make sense, Safia? And you can go through and just practice seeing them. Awesome. S&P is dancing at that termination condition. Guys, remember, you don't have to be first, right? Look what just happened. All day the market's been going down. You don't have to be the first one to try to go up. Fighting triggers, fighting trend, fighting direction. If this bottom is really going to be a bottom, if this is honest to goodness going to be an area that stops the market, the triggers are going to roll on a smaller chart. This one happens to be an 8 range. You'll see it on the 5 one as well. And I like this picture because it illustrates the difference between forming an opinion that an area will hold and actually seeing an area that's held. And this price right here at resistance, with everything going up, is where you think resistance will hold, right? The triggers are below it, but they're strong. I think resistance may hold. If it's really going to hold, the smalls will get to the other side. The large will go from green to red. And you'll notice that once all of that happens, the trend changes, the smalls get below the large roll, they become wide and down. This price, where resistance is held, is typically the same price where you're assuming it will hold. And it's what you do in this time frame, waiting, having the patience, that can be the difference between a great day and a horrible day, right? Because if you assume it's going to hold and you go short, you get stopped out. And if you try it again, you get stopped out. You try it again, you get stopped out. Son of a gun, I'm down 4 trades already. But if I just wait for everything to be in my favor, life gets pretty good. Jerry, you said you went short at 41.51. So you took that strong trend trade mid-band, right? Just like Paul's been doing all the way down. Nice, Jerry. How's your boy doing? Haven't seen Josh in here in a while. Gary, looking for the HVA, right? HVA, the same spot as wide triggers, small triggers? The answer is no. Great. Great job, Gary. Excuse me. Oh, all right. You know what? Keep him working. Got to watch that kid. Tell him we said hello. And then, Gary, when it's not a great looking bottom, right? When those trigger lines go through, it takes a little bit out of that HVA trade. But this is a great example of those triggers rolling, creating an opportunity. And let's see what happened. That was crude oil, right? +2, +10. Nice job, Jerry. So from crude oil, you notice how the large are still red, right? But the smalls are above. The trend has changed. We've got multiple divergences. Guys, if this is really going to be the end of the road for shorts, these triggers will roll. They'll get to back above 72.85. These triggers will pull back above 72.85 if it's really going to be a bottom. Tony, trading gold. Odds favorable. No terminations. You got in, and you say you got out because divergence printed? Oh, okay. So you got in, and then you saw the divergence print, and you got back out. So there's your entry. Tony, one thing I like to note is, and guys, tell me if you find this as true as I do. When you're talking trend trades, right? Tony, that was your best entry, wasn't it? Strong triggers, only one divergence, everything met. That's the one. And if you're in at 2010, 2 or 3, you're up 15 ticks before that divergence prints. And guys, I'm a big fan of catch that best entry, because the more things that change, the more change happens. And I can't tell. It looks like you made money on this one, which I always love it when you guys make money. It makes me happy. What was your exit price? It's hard to see it. 11 and change. So you got 10.8, so like 2 or 3 ticks. Okay, you got out right here. Right on. So let's look at what's happening. You're getting in, and remember, 13.2 leads the way, right? 13.2 says strong up. 13.2 says no termination conditions. You have the absolute best look every advantage clear path over here. Strong triggers, beautiful entry. Second divergence prints. The smalls are just now working their way in. With this much momentum, it's a judgment call. Because it's not 50-50, right? Because it's not straddling a fib or one-to-ones, 2 divergences don't worry me as much as that third divergence. And I think that it becomes a management potential, but because it's not a pivot stop out, it's just another divergence. This may be an opportunity for you to keep a stop in place because of the momentum. And then market flow gives you another opportunity right before. So even a stop behind that pivot as you work your way up, your odds favorable everywhere, looking great. Every chart says up. And those are hard ones because a second lower divergence makes you think a little bit, right? Let's not lose money. And I think that you are in a great spot, and you put your stop. It just kind of got you. But the divergence has already done what it was going to do. By the time it came up, it was done. These are harder to manage because it presents a different look. And your brain's like, hold it, 50-50, second diversion, I'm out. Crap, it wasn't a 50-50. And the more you study, the easier it becomes to get that right in the moment with that great management. Jose, 50-50 in a huge downtrend. Jose, why don't you have a mid-band? And you said entry at the area, but you don't have any areas at all, right? So Jose, right-click on your chart and reload that template on that 5-1. Okay, you're good? Jose entered at his imaginary mid-band. Still nice trade. Great profits, taking advantage of that strong trend, guys. And then Paul, 2 divergences, creates a pivot stop out. Are you kidding me? The Pineski. Guys, remember that pattern that we talked about earlier that we took a picture of? 2 divergences, trigger still outside, takes out the previous pivot, and it does it right to those areas. Not a high probability trend trade, but certainly a great opportunity in a strong trending market. Paul, nice trade, great entry. And then Tony, that's the same thing that probably got you out of your trade, right? Those two divergences, looking for that pivot stop out. Great job. This is just a strong trending market trend trade, but Paul uses a little pattern recognition. But it's a pattern that happens a lot, guys, and it happens on every time frame. Everything that we talk about happens on every time frame. They're still fighting, aren't they? Overrun the fib a little bit. There's a divergence low. And look how they came right back to that divergence low. Technically, we're in an uptrend, but both of your triggers are down. Guys, there's a huge fight. Fibs create reactions, right? Look at your smaller, faster chart at that fib. It's like a seismograph. And guys, that S&P is just... What happened today? Was there something that happened? That's a big push down, isn't it? And almost another mid-band. And we don't have fibs until 41.21.50. And guys, remember, eventually, these mid-band shorts are going to stop working, right? That's your cue to sit on your hands. Let's see if the Pineski happens. There's our pivot. Potential pivot stop out with weaker triggers, just for grins. Let's see if it happens again. Jose, is this the look? That's the one. Two divergences. See how it takes out the previous pivot, Jose? And see how there's an area right there for a bounce? One divergence pushes you up. That second divergence takes out the previous pivot. And guys, this is a key part of it. Is there something for the market to bounce off of at that potential pivot stop out? And in this case, there absolutely was. Never came, right? And they started printing for a reason. And guys, this is not a pivot stop out because all your triggers broke that divergence. This is your first divergence once again. And right off that mid band. The quickest profits ever if you were waiting for it. All right, Paul stopped out with divergence. No worries. Money all the way down. Beautiful, Paul. Safia. Safia says, if the boys can do it, so can I. Beautiful trade, Safia. Taking advantage of that trend. Taking advantage of that direction. Taking advantage of those areas. Did the two divergences play into your decision to get in up here? Just curious. The one-to-one, right on. Beautiful trade. A lot of money being made today, guys. Trading with the trend, trading with direction. Notice that these aren't high probability trend trades, guys. This is taking your ability to read charts and turning it into something. Whoops. If you try to toggle in between workspaces and you have that workspace, you're done. So guys, here's another pattern. And Safia, this goes back to why we define a good bottom as one that happens with no trigger lines through the fib. Because when everything overruns, very often it pushes up. Large triggers don't follow. Guys, see how the large triggers remain a full bar away? This bad bottom, right? Not a strong bottom, coupled with large triggers that can't follow along, lets me know that those sellers are probably pushing for that next key Fibonacci area. It keeps you from trying those longs, right? It's below support. Do you see that? The blue support is the key area. The trigger lines break it all the way through. And do you notice how they never get above that area? With all this acceleration up, those trigger lines don't follow. You guys recognize this, right? Gap theory. When price pulls away so far, and then it just finishes the move. And you're going to see that pattern a lot. And let's see if we can find an example or two. Here's one that breaks through the areas, pulls back to resistance, finishes the move. Trigger lines start to break through, pulls back to resistance, finishes the move. Off the one-to-ones, down to support, right back up. That one doesn't really qualify. Here's an example. Bad top, right, Safia? No areas of resistance. It's just trigger lines. Pulls all the way back to support. Finishes the move up to that key Fibonacci area. So you can start to see these a little bit. None of the trigger lines break through. They tried but couldn't. That was a good termination, right? Pivot stop out. Smalls can't break through. Good termination. Starts the move down. So go back and study patterns, guys. Just look. What do you see? Now we have one of those 50-50 looks. Small triggers are through the area, but the large triggers are not, right? My small issue is that 7260 isn't broken. I don't have a clear path. I have one loss of momentum on my 5-1. And my area is inside of favorable large triggers. I've got about 7 ticks. There's one divergence. This is an area with the potential to break but hasn't broken. Divergence lets me know that I'm getting a slowdown. If I take a medium probability trade, I have to manage assertively. We'll see if anyone takes that one. Gary, you were looking for it. You were waiting for a pullback without divergence. And divergence printed. We'll see what happens. With or without? With divergence, some people will wait for a market flow signal. Without divergence, a lot of people will go right from the area. Jared H., can you show me a picture? And I want to make sure that you have synthetics activated, that you have that tick data activated. If you don't, this 7260 line is coming from a 5-1 chart, and I know that because it doesn't extend all the way to the right. So it's possible that you don't have your synthetics working. But show me that picture. Earl, let's see what you got. All right, Earl, looking for that momentum style, right? Didn't wait for the pullback, but felt confident because of the 13.2. Everything set down on the 13.2. Man, you gave up a lot though, didn't you? By not waiting for the pullback. I realized you were going for that momentum style. It didn't work out and gave a perfect trend trade to the downside. So this is kind of cool though, right? Odds favorable momentum, no termination conditions. Earl, you got in looking to just finish the move and it didn't. But doesn't this area inside of favorable large triggers make you feel pretty good about the fact that it's still going to that next area with this look? You had to keep some risk on it. I probably would have added on contracts right there at the high probability trend trade. Great trade, Earl. Great chart reading. Great restraint, keeping your stops where the market shouldn't go, and it paid dividends for you. But I'll tell you what, that 14 ticks on 3 contracts could have been 25 with that good entry. All right, Jared. Okay, so you're on 7. So you're on 7, odds favorable. Nothing at 60, huh? Nothing at 60 on either chart. We're on the same time frame. Jared, do you go through every morning? Let me go back to the education page. So when I go and I look and we don't line up, there's a couple things that I look at first and foremost. The first thing I always ask is, are you deleting cash and tick every morning for NinjaTrader 7? So if I pull up Documents, NinjaTrader 7, Database, are you deleting this cash and tick folder? And that's part of making sure that there's not corrupted data in there. And sometimes that'll be the difference between us lining up or not. But this is my morning ritual. I do this for NinjaTrader 7 and 8 every morning. I do a little more for 8, but that's a great place to start. And then the second thing, and I'll put this picture in there for you. You did it after starting up NinjaTrader? Well, as long as there was any. So Jared, the next thing that I do, if I'm not lining up, and this has helped a lot of people, hopefully it helps you, you have to disconnect to do this. But you'll disconnect, and then you'll go Tools, Options. Make sure that your merge policy is Do Not Merge under Data. And then once you make sure, and you have to be disconnected for this. I'll say it again. Whoop, looks like I just lost NinjaTrader 8 doing too much. You can reset your database. You can repair your database. Click OK, and then reopen, reconnect. And a lot of times that'll fix it too. That'll pull out any sort of corrupt data that you have. I would try this one before I completely rebuilt and just see if that helps you out a little bit. And let me know. And then, of course, if we don't get, yeah, for sure. If that doesn't help, you can always get with Jason, and he can help you out as well. Paul, 50-50. Whoops. Smalls below, larger not. One divergence, Prince. Surprised to see you in at the lower end, Paul. Usually that puts you at the higher. Reversal bar, Prince. Risk established. And you had an HVA at 67. I like that. The momentum of the 13.2 got you in earlier. I like it. Good looking trade. What happened? Is this the follow-up? Out break even. And guys, I love this because this is a reminder, right? That 50-50s aren't high probability trend trades. 50-50s have areas with the potential to break, but they haven't broken. And then because they had the potential to break, but they haven't broken, you don't have the advantage of a clear path. And if you don't have the advantage of a clear path, well, then you've given up one of your advantages. Great entries create manageable trades. Comes right back to that area that hadn't broken yet. Paul, great job. Whoops. Great job taking quick profits at the trouble spot. And getting a break even. And guys, I'm going to make the switch over to NinjaTrader 7 here. Nice trading, Paul. My 8 isn't having it right now. All right, Miss Safia. 50-50. And then Safia, what do you think about that momentum? And I think that this is a big one. So it's not a 50-50, right? It's a clear path, 100%. It's slowed a little. It's still weak. You do have a clear path. There is a downtrend. It's been a crazy downtrend all the way, right? Divergence prints, that's okay, but you have weak triggers here as well. Definitely no momentum. You're counting on just that thing. I'm not even sure that it was medium because, and if we just look at, oh, that's yours. If we just look at, let me pull this up real quick. You're taking advantage of a strong trending market is what you're trying to do here. But we didn't have momentum, right? Because we had weak triggers on both charts and a divergence on the 5-1. You definitely had a clear path. I agree with that 100%. Nothing in the way in a strong trending market. And then you didn't really have an area inside of favorable large triggers except all the way down here at 2750. And if you had gotten in here, that reversal bar gives you an opportunity to get out. But at this point, it's just not doing it. That loss of momentum on both charts is just pushing it up higher. I'm always willing to give away an advantage, guys. It doesn't really bug me too much to give away one advantage. When I start compounding the advantages that are going away, I start rethinking things a little bit. And then, Alan, you took that medium probability, 50-50, and a downtrend from the perfect spot and made money all the way down. Alan, beautiful trade. Gary with the bongo bingo, same thing, 50-50, all the way down. And then Paul, let me just go back and tell you, great job following your rules. Great job following your rules. You took quick profits, you got to break even, and it just got you. I know your rules. Nice job. Gary, good job. And Gary, why would you re-enter a determination condition with absolutely no trigger lines through? I have to ask. Are you saying you should have re-entered because of the weak triggers? Because of the termination condition? Or because after the fact, it kept going down? See how that works? I don't know what 50 means. when it becomes a 50-50 again, right? So this one, absolutely, what a great place to take profits. Right at support, right at support, weak triggers, market flow signal from outside of the outer band, What a great spot to take profits. This one, you got to sit on your hands a little bit, and then when those triggers start breaking through, this is where I might consider, let it break. Great trading though, Gary. Man, and when it happens quick, it becomes a little difficult sometimes. So guys, there it is right there. 72.33, perfect termination condition. Absolutely no trigger lines go through. We've reached Fibonacci resistance. None of the trigger lines have gone through. And guys, what do we notice about those large triggers? Does everybody remember the gap theory? What's the gap theory? Gap theory says that if price pulls away from the synthetic triggers too far, too fast into a Fibonacci area, it likes to snap back to the triggers. So guys, when price reaches support and the large triggers are behind here, price reaches this Fibonacci area. Guys, this acts as like a vacuum. It's like this sucking noise pulling it back to the large triggers, which means that opportunities in between the top of price and these large triggers become much lower probability, right? They become much lower probability because price typically pulls back and closes that gap. That's the gap theory. That's a great pattern to recognize. I'm going to open up my ES real quick. Be smart. Man, Bobby, wouldn't it be great if it were that easy? I struggle with that every day. Continuous downtrend, clear path, weak triggers. Loss of momentum. Jose, why did you get in at the bottom? You don't even know. And then you get in again and get stopped out again, and then it pulls back to the mid-band, and then it gets you again. So here's my thinking on this, guys. And Safia, this is just like yours, isn't it? Even in a strong downtrend, if I don't have the advantage of momentum, and I've only got one area inside of favorable large triggers, guys, and it lines up with the area right here. And Jose, what did this chart tell you? I can't tell. I'm not taking 5 shots at a trade. I'm not taking entry, 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 entry. It feels a little bit like hope, doesn't it? Feeling a little invincible. But how many shots are you going to take at a trade where you give away advantages like that? That's kind of where my brain goes. Well, that's where my brain is supposed to go. There's some days that it looks exactly like this, Jose. But remember that. If it's not perfect, but it's good, take a shot. Go after it, right? Say, heck yeah, because of what's going on, I'll take one shot at the best spot. And because there's a loss of momentum, my best spot has to be up here at the mid-band, right? Not down at the bottom. And because I'm losing momentum, I'm going to take this one shot. And if it doesn't work out, Jose, are you familiar with the continuation style? Watch this. This is pretty cool. So Jose, if you get in here at the mid-band, whoops, and it doesn't work out, you get stopped out. Look at this right here where the small triggers roll. Now all of your trigger lines are facing the exact same direction. And there's a stab back to that mid-band, almost the exact same price. There's your second chance if you're really going to take a second chance. Does that make sense, Jose? With the loss of momentum, your first shot comes from the mid-band. If it stops you out, Your second shot lets the small triggers roll and happens in an area where they collide. And the cool thing is, Jose, is that if these triggers never roll and they just go wow all the way up, it keeps you out of trying to take multiple trades when you don't have those perfect conditions. I love that look, and I think that that's an amazing way to keep yourself in check a little bit. When I'm looking to see, I thought I had a picture of it. Well, I did, and I don't know where it went. I'll see if I can find that picture, but I had a picture that talked about that entry. There we go. Sometimes good trades don't work, right? You get in at the mid band, but that divergence pushes it lower. Never really breaks the low, and then everything rolls and you find that opportunity. If you took the long here, everything dances. You don't know how far it's going to go, but when everything rolls and all triggers agree, I love to study these, and I studied these after I started doing exactly what you did, Jose. When I said, well, this long should work. And then I was like, oh, this long should work. And then it gets stopped out. I'm like, well, maybe I'll do it again from right here. Maybe I'll do it again from right here. And then I'm all the way down here, and I'm like, well, I'm not taking this one. And then it goes up, and I'm like, son of a gun. And this was my son of a gun entry. But the 13.2 still has to be there, right? Yeah, nice trending day is called an apology for yesterday not moving well. Great lesson there, Jose. Good job on posting. Gary, you say no HVA trade? Because of the termination condition? Nice job, Gary. And you're not taking this one. Weak triggers, clear path, area to trade, market flow signal. You chose not to take it. No worries. Doesn't fit your rules. Doesn't have to be your trade, right? If it doesn't fit your rules, it doesn't have to be your trade. So let's talk about what we see. Don't have momentum, but we do have a clear path. We do have an area right there at the large triggers. I love it, Gary. Stick to it. Smalls, inside, yeah. No reason to give away advantages, guys. You don't have to. Whoops. There's my untitled workspace. There we go. So there's crude oil. Now I have a pivot stop out at support, guys. Look at that. Gap theory. Gap theory worked, didn't it? Price accelerates away from the synthetics, reaches Fibonacci support. Why aren't we taking that long trade? Because the gap theory says this will act as a vacuum. Price comes all the way down, reaches support, reaches a divergence low, and now it's trading back above, guys. You're in a holding pattern. There's absolutely no shorts into this area, but it's too soon for longs. So let's play if then. If everything rolls and goes up, maybe we look for a shot. If, and what's probably more likely, in a day that has been absolutely railing to the downside, is if we break the area and get odds favorable momentum in a clear path, then you can look for shorts, right? Oh, thank you, John. And guys, so John put the new trade tracking sheet, and it is an Excel spreadsheet. And you're going to have to extract it because John is the king of the zip files. I'll replace the one I have. Oop, and it's not going to let me. Man, Mary did an amazing job with that. Guys, if you ever wonder how people are getting so good at what they do, it's because they're doing stuff like this. Because they're taking control of their education. They're taking control of what they see, what they do, why they do it. They're managing everything 100%. John, does that new one have all of these in there? Okay. I couldn't open it. It wouldn't extract for me, probably because I had stuff open. Guys, grab that spreadsheet. And the one thing that you're going to see is that spreadsheet is going to have this 165, 170 pictures of perfect entries for you to study each and every day. All right, Luciano, strong trending market. Everything says down. You say, I'll get in at resistance inside of favorable large triggers with a clear path and weak triggers. Stop keeps you safe. Little quick profits. Little profits again. Nice job, Luciano. Guys, strong trending days. And there it is. Now that area broke, right? We're 50-50. The large haven't broken, the small have. We've got a pivot stop out, though. But there's your first 50-50 entry with absolutely no divergence. Smalls are through. I'm going to take a picture. Oops, I want this bigger. I am all over the place. Remember, guys, your high probability trend trade takes you to a medium probability trend trade. Let's go through the checklist. Let's write it out. Did we have odds favorable momentum? That OFM, what do you guys think? I'm going to say yes. Does anybody disagree that the smalls are below the large are wide, they're angled in the direction of the trend? Everything says the market is likely to continue in the direction of the trend. But because my large haven't broken these areas yet, this is what we call a 50-50 trade, guys. Areas with potential to break that have not broken, no clear path. I'll let my entry be trouble-free on the 5-1, right? I'm not going to compound the issues. So what do I have? I have no divergence. So no loss of momentum. Whoops. I have strong triggers. Adding fuel to the fire. And then, guys, I have a small window of opportunity. This is 100% textbook, picture perfect 50-50 trade, guys. So I'm going to take this picture. I'm going to open up a spreadsheet, right? And I'm going to put that link in there. And I'm going to label it perfect 50-50 short. And I'm going to come back and I'm going to study this. And this is going to be the basis for what every 50-50 short I take looks like. Guys, that's your path. That's the one. I'm going to click save. I'm going to keep it. I'm going to make sure that I'm good. And look what happens. Divergence, pivot stop outs, pivot stop outs. Those areas never actually break. Divergence, divergence, guys. There's fights. All right, David, let's see what you did. Harder day for your style today, David. Right, because you don't have the clear path. I like the first entry, the profits, and then you get that pivot stop out. And there's kind of that same thing. On a medium probability, when you're giving away advantages a little bit, I love the first one with no divergence, make your money. The second one becomes a little bit dangerous, but when it's a pivot stop out and weak triggers, that's where I eliminate these other ones. No reason to give it back. You're giving away too many advantages compared to having a pretty good run at it. I hope that makes sense. And then it goes back to on those 50-50s. There it is. When I talk about a 50-50, guys, my money's worth a perfect entry, right? For new users, the less you give away, the easier your life becomes. And then as you grow with the software, your rules may change a little bit, but this is a great approach for brand new users. Gary, let's see what you did. I'm not sure how this is a termination area. Gary, this is a pivot from the middle of nowhere, but we can create expectations when divergence prints on the 13.2 from the middle of nowhere. We can use that first area, that mid band where they line up, as a potential bounce point. You'll notice that it comes right in line with an HVA. Tells you, man, I'm probably not going to try this short. But it's not a termination condition. It's just a pivot. $40.98 is your bet. Are you saying a big fat blue fib? But right now, what do we have? We have a slowdown. We have a slowdown. Maybe we get a second slowdown. So do you guys remember pivot from nowhere? Typically pulls up to Fibonacci resistance or support. And what's it do after? What's a likely scenario based on patterns, guys? And remember, it's not guaranteed. Should we just leave that there and see if it comes true? Finish the job. I love it. Guys, I'm going to take a few minutes. When I come back, here, let's do this so I don't have to leave those on there. I'm just going to take a picture. We'll come back and revisit it. John Novak used to do this nonsense. I used to think that he had a crystal ball or something, but what I realized is that he studies patterns over and over. Studies patterns, creates expectations based on looks that he sees in the market every day, that he's put into his spreadsheet, that he has studied over and over and over again. All right, guys, so I'm going to leave you with this. I'm going to be back in a few minutes. If you have any questions, post them in the room. If you have any comments, post them in the room. If there's anything that you want to talk about in the last hour, let me know. I'll be back in a few minutes. When I come back, we will finish strong, guys. Mic silence for just a little bit. All right, y'all, we are back, getting into the last hour. Let's finish strong. What do you say? So far, expectations are being met, right? We had that divergence on the S&P from the middle of nowhere. It continues to climb up. Now there's some momentum to the upside. In the 5-1, we see a loss of momentum, a loss of momentum. Holy smokes, a divergence creates a pivot stop out, takes out the previous pivot. And it's still climbing. Not necessarily rules met, but if nothing else, pattern expectations seem to be coming to fruition. Gary, let's see what you did. Pivot stop out. Not coming from a Fibonacci-based area. And how cool is this, guys? Pivot stop out creates a pivot stop out. Pretty neat, isn't it? Bad bottom, not coming from fibs. Pivot stop out creates a pivot stop out on crude oil. It'll be interesting to see what happens. Large triggers never make it above this area of support. Gary, the mid band doesn't worry me as much as the fibs. Needs to clear 41.21 on the ES for a trade, yeah. Or it needs to roll and go the other direction and give odds favorable and no termination conditions. So there's that pivot stop out. Notice that the large triggers never made it below, right? Just looking for that clear path. Once again, price pulls all the way back to support, all the way back to large triggers. Pattern recognition. 1, 2, 3 divergences in the same price range. We've seen that once or twice. Just in a holding pattern, right? The markets gave it away for 2 hours. And now they're taking a deep breath. People are taking profits. People are entering positions. Now we have a termination that creates odds favorable. It's a 50-50 look. Smalls are above the area, the large are not. What's the window of opportunity look like? Let's go from the top of the triggers to the bottom of the triggers, and then let's squeeze it to the highest point of support, to the lowest point of support. If then, right? If there's a pullback, if there's no divergence, if my rules are met, well then I've identified a spot where a trade may be taken. As long as the rules are met. There's 2 divergences in the same location. Just keep going back and forth, right? Waiting for rules to be met. If my rules are met, I'll take a trade. If my rules aren't met, I won't take a trade. So while we wait, let's talk, right? Got 46 people in here, guys. How many new people do I have in here? Who's new to Nexgen? Who's learning? Everybody's learning. That was a trick question. Guys, if you're brand new, if you're on demo, if you're in your first 30 days, I want to remind you, this last hour, it belongs to you. Marshall, what do you want to talk about? So guys, things I notice when I know you're new, when I know you're here, if I'm not seeing pictures, man, you can't be perfect yet, right, Marshall? You're pretty awesome, but you can't be perfect yet. Guys, to minimize your learning curve, post pictures of your trades in class. I can't stress this enough. Every trade, win, lose, or draw, everything that you have a question about, that you wonder about, that you're not sure about, send me pictures. Let's talk about them. One of the most common things that I hear from new users is, well, I didn't want to take up class time. Didn't want to take up class time is such a common thing. I get private messages. Hey, Mark, will you look at this? I didn't want to take up class time. I want you to take up class time, guys. I want you to keep me so stinking busy with pictures that we never even get to look at the live market because we're seeing everything that happened in it on your pictures. Every trade, win, lose, or draw, and if you win and the rules are wrong, you may have a short-term victory but a long-term failure. How are you going to know the difference? To be sure, you need feedback, guys. Feedback from me, 15 hours a week, every week, live, everything that you do. If you place a trade on the simulator, you participate in class, there's no risk of loss or capital. Guys, when you're on simulator, you should be just going crazy with everything that you think you see. Annotating charts, posting in the room. It's the mistakes that we make that we grow from, without a doubt. You need someone to tell you what you did right or wrong, guys. That's Nexgen. That's what we do. That's what sets us apart, is this commitment that we have to your success every day. Every day. David, let's see what you did. You missed seeing the divergence print? Okay. But you still have a good-looking bottom, right? Not a strong bottom, but 3 divergences, pivot, stop out, tons of momentum. 1 divergence, tiny window of opportunity. And this is one of those ones, David, where the momentum style doesn't seem to be working, but where is your stop? Your stop is at an area of support inside of favorable large triggers with odds favorable momentum and no termination conditions, right? And guys, that was just a 50-50 with divergence that didn't work. David, I think for what you're doing, it wouldn't kill you to run some synthetics, or if nothing else, David, because normally these charts have synthetic triggers. They have the 5-1 areas, they have the 21-3 areas. At 72.60, you have resistance. Draw a line on your chart. Recognize that it's 50-50, right? At 72.26, you have a fib. Draw it in there. If you're not going to run the synthetics because you don't want to crash, that's cool. Drop a line on there. Know that it's there. Know that this was a 50-50. Know that you didn't have the clear path, and I bet you it would have kept you out of that trade just based on your study, right? With the large triggers so far below. Yeah, so I think that would be advantageous. I'll certainly never tell you that you have to or that you should for whatever reason, but I think that you would find it advantageous to be able to see those fibs from other charts. And there's 2 ways to do it. You can either right-click and activate tick data, or just draw them in if you want. So let's see what you have. You bought into the 1-to-1, so you tried to go long, huh? All right, so do me a favor, Marshall. What were the strong signals? Was it your spidey sense tingling? Can I show you what I see? I see a downtrend, right? I see a red background, meaning that we're in a downtrend. I see the large triggers down, and I see the small triggers below. Are you with me so far? We're in a downtrend, the large are strong, and we actually have odds favorable momentum to the downside. What we have here are areas of resistance inside of favorable large triggers. So right where you went long, is actually a rules-based short because it goes with momentum and it goes with direction and it comes from an area inside of favorable large triggers. That's the initial brand new, show me this entry for short. And I'm going to say, hell yeah, Marshall, great job. And then we're going to talk about a little bit of when there's a pivot that doesn't come from Fibonacci anything, the midband becomes the first target. So this area right here is a pretty good bounce point. So if you're waiting for those longs, you're waiting for a change in direction on that smaller chart, waiting for that odds favorable momentum on the larger chart. Does that make sense? But I think that the number one best advantage you can give yourself is trade with the trend. And then the second number one super duper, I guess it'd be best advantage number two. I'm going to share the book that John Novak wrote. How to Commit Financial Suicide in One Easy Step. This cracks me up every time. Chapter 1, warning signs that your friends are in trouble. They're trading against strong triggers. So true story, you can use those trigger lines in their strength and just never fight it. Because if they're favorable to continue in the direction of the trend, well, then your odds of success on a long go down dramatically. And then chapter 2, warning signs your friends are not paying attention as they trade into termination conditions. Seek help immediately. This one always cracks me up, guys. And this was put together tongue-in-cheek because those are two of the biggest mistakes traders make that cost them money. So I always like to share that every now and then. Just not fighting. You don't have to fight. That's the beauty of what we do at Nexgen, is there's absolutely no reason to fight. Guys, are we seeing a pattern repeat itself again? Beyond the area, pushes up, finishes the move. Beyond the area, pushes up to resistance, 50-50 doesn't work. I see a blue fib down here. And we'll see. We still have some work to do, don't we? Was this too close to a termination? I like it. So what you're looking at here is weaker triggers. The small have made it through, the large haven't. You're giving away the advantage of momentum, Marshall. But great recognition. Pull back to the area of support inside of favorable large triggers. This one is exactly what we look at on a medium probability trade. There's an issue, right? It's not the strongest triggers ever, but you've identified the entry. What market is this? Is this the S&P or is this gold? And is that today or yesterday? Because we haven't seen the ES rail up today. So let's go through that drill again. Do you see this tail with odds favorable momentum and no termination conditions? Scroll back to 11:16. Let's do that. Can we do that together? We got time, right? Nothing but time. I'm going to scroll back to 11:16 yesterday. I went way too far. And at 11:16, what time zone are you in, Marshall? What time zone is your computer set to? Yeah, I think it's the wrong day. But what I want you to do, and this is a great drill, is when you have those tails, you are on Eastern, yeah, that's probably a different day then. When you have those tails, circle them and see if they lined up with an area inside a favorable large trigger. So for example, if you circled that tail, this is how you're going to recognize that best of the best look, Marshall. This is how you're going to build that trust, is go through and circle those tails and see what they look like on the 5-1. And then, of course, the second half of that is burn that memory in your mind by using the spreadsheet. You can download the spreadsheet with like 100, it's almost 100 and, 60 times, almost 180 pictures of perfect entries. And I'll give you a copy of mine right now. Go back and check it out. So start burning this look in your mind. And then, of course, when you take a picture, yeah, man, I got you to the end. This is what I do. 100%. Get in the habit of writing those rules, right? Writing that odds favorable momentum, writing that no termination conditions, and make sure that what you're looking at lines up with the checklist, right? Remind yourself every trade that this is what you're looking for in the beginning so that you can grow a little bit beyond it. And the cool thing is, Marshall, is every time you post a picture in this room, we're going to talk about it. And we're going to talk about what you did well, what we can do better, advantages you had, advantages that went away. And we're going to keep doing it until you get exactly where you want to be. David says, finally. Let's see. You took that momentum, right? Didn't work out. And then you said, wait a minute. I'm going to take a rad 50-50 right from the area and make money all the way down. Beautiful trade, David. There's something to be said for those trend trades, isn't there? Divergence potential. Have you really, Bobby T? Good job. Thank you for saying that. I missed the one just above DHL. No, Paul, I was ignoring you. I don't care about your management. Just kidding. Hey, David. Divergence potential. Wait for the trend trade. No divergence potential. I like it. Great job, man. Great job. All right. Paul says he knows the play here. Curious to what my thoughts are on management. Let's see. Let's zoom a little. This is a termination condition, so you usually wouldn't trade it, but already in a trade, how do you think about management? So, Paul, your circle is a great entry, right? 50-50? Is there any other writing on here that I need to look at? Nope. So let's see what you did. You take the 50-50. It's beautiful. Profits. This is a termination condition. That's a pretty solid one with divergence, but so was this one. You take profits again on the way down because everything said go. Paul, I think this is where you have to just make a decision. How much respect you're going to give termination conditions, right? Because you had one termination condition with divergence right here, and you chose to stay in, and you didn't exit with a divergence. And then we get to the second level, and divergence prints. See how you didn't respect one and traded back to it? And now you respected this one. So it's hard to say because it's inconsistent. So if I'm in this 50-50, I'm probably taking profits right here and waiting for it to break. And I probably would have missed the move that you missed here. If this one had no divergence, I might consider re-entry because of the momentum and everything coming down. But yeah, I love big blue lines. And if I'm in at 66 and I can get out at 45 for $300, I'm out. I'm waiting for the next one. And it's fun when we hold for bigger moves, right? It's fun when you get that rock star home run. But I don't know how this line was any less apt to create a bounce than this line was. So it feels like your hold on the second one, on the first line hit, was more hope because that looks exactly the same, doesn't it? Didn't get you at the previous pivot. Everything says down, a couple divergences. Well, it didn't get you at the area inside of favorable large triggers either. Does that make sense on the management one, Paul? Yeah, cool. Have a plan and then stick to it. I find, and this is just me, guys, I'm not saying that you guys will do what I do, but I find that the larger the move is that my brain has decided has to happen, the less consistent I am with respecting things that should get me out of a trade. Does that make sense? If I have my profit target all the way down here, I'm going to make poor decisions based on what's happening in the moment. And that's just me. It may not be you. You guys are smarter than me. And guys, they're fighting from the middle of nowhere, aren't they? Didn't make it. Triggers didn't follow. Pulled down. Didn't make it. Area outside. And now it's pushing right back up. 41.16. Let's see if the Pineski happens. Yeah, that happens. Let's see if this pivot stop out takes out this previous pivot, just for grins. See if patterns repeat themselves. Hey, Paul, I got your pivot. Remember when we said divergences not coming from an areas? Hey, Mark W. Welcome to the room. And then David got the perfect trend trade, made money. Divergence, divergence. That's okay to not enter there, right? David, I kind of like this. There's that pattern. Pivot stop out typically creates a pivot stop out, and it didn't make it. Paul even noted that. And then you get three divergences in the same general location. I don't know that that's timid as much as, ready, here comes the praise, David. I don't know that it's timid as much as it is a fantastic recognition of multiple divergences in the same location with the potential to end the trend. I think it was a great read, David. Nice job. And when you make money on the easy ones, isn't it easier to ignore the iffies? Paul, you took the three divergence short. Because it took out the pivot. Looking for those quick profits, maybe the bigger move down to the next. Oh, that's the S&P. I was like, those don't line up. That doesn't look good. It got you? Well, and what do you suppose contributed to that? 3 divergences in the same location? Man, they're there for a reason, right? 1, 2, 3, small chart showing change. Hey guys, remember, this is one of those ones where people go, but Mark, the triggers were still outside. This on its own is a termination condition, guys, right? So you're choosing to trade into a termination condition. That's it. When does it become more powerful? It becomes more powerful when the smalls are inside. It becomes more powerful when this pivots higher. But guys, 3 on itself is still a termination condition. So what you did, if you took the short, is you made a willing and knowful, that's not a word. You made a choice to trade directly into an area that may stop the market, that may push the market higher. Does that make sense? And Paul, I don't know if you did this or not. Gary, you saw it. 1, 2, 3. 3 divergences, right? That's enough. I don't know if you saw it in the moment because sometimes, and guys, this is how my brain works. Let me know if yours does the same thing. You decided to ignore it. Sometimes I get so focused on it taking out the pivot that I forget to put it all together, if that makes sense. Sometimes I get so focused on, oh, it's going to take out the pivot, it's going to take out the pivot, that I forget to pay attention to what's happening around everything but the pivot. I've done that. It's like forming an opinion. I think the market's going to do this, and you start really focusing on that, right? So, Paul, what's that second opportunity? You know it. What's that continuation style? If everything is the same on the 13.2, if your rules are still met. Jose, remember we talked about this one earlier? If you're not sure, let the small triggers roll. They haven't rolled yet. Yeah. And if they don't, it keeps you safe. That was crude, right, Paul? Oh, that was the S&P. Wow, the crude and S&P looked exactly the same, didn't they? There's your S&P. Did it go without you? I'm so confused. Oh, I see. It went down, created the pivot stop out. Check it out. The Pineski pivot stop out takes out the previous high at least. Guys, now we're into that area, 41.21. From a bad bottom. Let's see how the market reacts. Jose, same thing. 3 divergences. You took it anyway? Yep. Termination. I agree wholeheartedly, Gary. Textbook termination. And what makes this termination even more, I won't say stronger, because a termination is a termination condition. Do you guys remember, where's that picture we drew? That's the S&P at 1118. That was 30 minutes ago, right? Pivots not from an area typically find that area of resistance and continue the move. It's not guaranteed, but that's enough to keep me from trading into this termination condition. And the market's been on a crazy downtrend, guys. There's going to be corrections. There's going to be fights. There's going to be complete just duking it out between buyers and sellers. This might be the bottom of it, right? This could be the end of it. We don't know. But until the rules are met, how do you feel about a 50-50 from a bad bottom in a downtrending day, directly at resistance and one-to-ones? 10-foot pole. No trade for you, Zeba. I agree. That's just me, though, right? That doesn't have to be you. But the cool thing is, guys, is I've studied my patterns, right? I know where my advantages lie. I've got a bajillion pictures just to reinforce all the good lessons. And for me, this becomes a no-go. Safia, do you have a question, or is that a high five? Virtual high five. That's what I'm going to go with. But guys, you really do start to recognize patterns. My brother has impressed me for years and years and years with his ability to seemingly predict what the market's going to do. And guys, we can't ever predict what the market's going to do. The market's going to do exactly what it does, and it doesn't care what we think. It doesn't care what we want. It doesn't care what we hope. But the reality is that you can begin to recognize patterns. And through pattern recognition, you can create expectations, right? Well, this is a pattern that I've seen stop the market and reverse it 1,000 times. So much so that I'm willing to not trade into that pattern. And then every now and then, it's going to try and convince you to break your rules. It's just going to skyrocket and break everything that you thought you knew about the market. But the reality is that the market isn't a one-time event. Everything happens in patterns, like cyclical. So you want to get a base. You want to get this, this foundation of great-looking entries. Because if you take 100 high-probability trend trades, they're not all going to win. But they are probably going to win more than they lose, which creates a statistical advantage, which creates a basis for creating rules, which creates a system where you can develop trust and feel comfortable and confident taking the trade. To have a clear path, absolutely. David, absolutely. To have that clear path, your large have to clear it as well. Otherwise, it's just a pivot from nowhere, coming back to the mid-band and resistance with the large triggers below. And guys, these small swing one-to-ones, these purples, these are nice little bouncy points. Man, Paul, I hope so too. I hope the sun comes out. I played 18 yesterday. I'm going to go walk 9 today too. That's what I'm looking forward to. I like them. The new clubs are good. I still suck, but the new clubs are good. I shot a 44 on my front 9 yesterday, which is my best front 9 maybe ever. And then I got paired up with a guy and testosterone took over and I tried to kill the ball and do everything different. And I had 2 horrible holes. And then I got paired up with another guy and I tried to kill the ball and show off and be the alpha male. And I had 2 more horrible holes and then I got it back together. I deviated from my plan because I formed opinions. Is that a 50-50 with no divergence on the ES? Right now? Jose? That's a termination condition with divergence on the ES. From a bad bottom in a downtrending market directly into resistance. Jose, the same resistance we talked about 45 minutes ago. You guys remember when we drew this picture? It took a while, didn't it? Jose, you said they were going to 4098. You called it. You pulled a John Novak. What do we have? Termination condition creates a full reversal. Full reversal gives me odds favorable momentum. Odds favorable momentum. We're just waiting for things to line up, right? Is anyone else absolutely amazed by Fibonacci? Or the patterns that present themselves every day? Guys, it blows my mind. All you have to do is study it. All you have to do is stay in the game long enough to create recognition. And then trust, guys. Trust is the belief in the strength, the consistency. Trust comes through repetition. Trust comes through feedback. Trust comes through doing the same darn thing every day until it's ingrained in your memory, right? Trust comes from, bum, 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 bum. Here comes your Sunday school answer on trust. You ready? Let me get to the tutorial section again. Trust comes from learning the rules for when it's okay to trade. And then trust comes from seeing them so often that it becomes easy. And a lot of people don't believe that it could ever become easy, right? Oh my gosh, this was hard, Mark. No, it's not. You just need reps. Kindergarten was hard. By the end of kindergarten, you weren't even eating paste anymore. You had that stuff figured out. This is it, guys. We start off, looks like fun. And you're like, uh-oh, I got to learn some stuff. Marshall, you're right here. I got to learn stuff. And then we all get cocky, right? We all go, man, it's been 30 days and I'm a freaking genius and my mom says I'm handsome. I'm just going to put 10 grand of my own money in the market. That's what I did. I lost 5 grand almost instantly. This little note is based on a true story. And you take what is a complete, just a kick, you know where, right? And you get knocked back to this beautiful, I don't know shit stage. And I'm okay swearing on this one. Because guys, this is where great things happen. This is where you commit to posting in class. This is where you commit to using the spreadsheet. This is where you commit to writing a plan. This is where you commit to not breaking your rules. And you still will. But this is where your brain says, you know what? I know it works. But now I have to do what he told me to do. Now I have to take the path that was put in front of me. Now I've got to study. Now I've got to fill up a spreadsheet. And guys, this is where you start climbing, right? And anyone that's been in my classroom, I remember when you were here. And now that you're here, I'm still here, right? I'm still here with you on this climb, just like I was in the very beginning, guys. That's my commitment to you. I'm not going anywhere. Commit to the process. You have 2 options. And guys, this isn't a prediction. You can cut this part of it out. Did you know that? You don't have to go through the now I get it or not, I don't know shit stage. You don't have to. Go from looks like fun directly over here. And use the spreadsheet, use the classroom, use the tools provided, and you can bypass all of these pitfalls, guys. You can cut 30, 60, 90 days off of your education. If you walk into this room and go, hey, I'm allowed to be new. It's okay. This is my first day. Those of you that are engineers, you weren't building bridges on the first day. Those of you that are doctors, you weren't doing surgery on your first day of medical school. No matter what you do in life, you weren't an expert on day 1. Don't expect to be here. And then just keep taking steps, guys, every day, a little bit closer I love the did I do that stage. When you start making decisions based on the patterns that you recognize. And guys, there's no reason for anyone to not get to the I did it stage. We're all going to get there at different times, but you're all going to get there. I'm going to make sure of it. But you have to be open to criticism, right? You have to be open to feedback. You have to make yourself vulnerable and put it out there. And more importantly, guys, you got to not think you know everything, because I don't know everything. I learned from you guys the same way you learned from me. So take a little time, do a little study. Thanks, Paul. Constructively, maybe? I try to teach. Guys, I get all in my feels. I didn't post in the room for 3 months because I get all in my feels. John would tell me that I traded into a termination condition and I'd get my feelings hurt. I'm a sensitive kind of guy. And that happens to people sometimes. And that's okay. But the reality is that we just have a goal, right? Let's get to the goal. All right, guys. Gary, you know what? I always joke. I did all my tough guy stuff earlier in life. I'm focusing on my nice guy stuff now. Life's a lot easier like this. And I love to teach. And I love to watch you guys grow. It makes me happy. So I'm very thankful for the opportunities you guys give me. And on that sappy note, guys, I'm going to call it a day. I'm going to be back tomorrow morning at 9 a.m. We're going to do this again. We're going to talk about rules. We're going to talk about advantages. We're going to talk about patterns. And we're going to keep doing this until you guys fire me. That's my goal. Buy your lifetime, learn the stuff, and just say, you know what, Mark, I don't need you anymore. I'll swing in and say hello now and then, but I'm going to go trade and make money without you. That's my goal. All right, guys, have an awesome day. Be good. Take care of yourselves. I'll see you in the morning. Bye, guys. That is very important to what we do, in your trading plan and your